So I have been probably the biggest CCL bull out of anybody I know, and I just sold 400 shares. I'm going to go over why I did that, what my plans are for the rest of the shares that I own, and where I see Carnival Cruise Line going in the short term and the long term. So sit back, relax, and let's get started. Do not know, I am a huge CCL bull around these prices. I really like the company. I think that they are at a great discount, even with everything that's been going on, obviously. And while I do preface this video with I sold CCL, I didn't sell my full position. So in total, I had about 1,200 and something shares. I still have 830. I only sold 400 today. And a lot of people in my community are in this as well. And now everybody's wondering, Pete, why did you sell some of your Carnival? My original plan was wait until it's back around $25 to $30 and sell out of about half of my position and let the rest ride for the next couple of years. And here's why. I sold Carnival mainly, and I'll go over fundamentally why I think this could happen, but mainly because I do not think that we're just going to move back up, anytime soon, up to these levels of $20, $30. And I started buying Carnival Cruise Line, personally myself, at like $36, which was a terrible price. I knew that the coronavirus, I can't say it, I knew that was, YouTube does not like when I say it, but I knew that whole situation was going to eventually come over to America. I knew that it was going to be bad. I didn't think it was going to be nearly as bad as it has been. So I started buying at $36 as well as other companies. I started averaging down again at 26, and I really started buying heavy at about 18. And then down when it was around $8 a share, I was like, you know what? I'm just going to throw some more money in it. And luckily, I brought my average all the way down to $13, and I think it was like 70 cents. And at one point, I was up pretty big on CCL. I was up close to $3,000, but I was like, you know what, I'm just going to wait. I'm going to hold it out. I'm a long-term investor. And we pulled back. So whatever. I wasn't expecting it to just keep going up. There's a lot of fundamental issues going on with this company, with the economy, with a ton of other things that are happening. The big thing for me is that the more I look at the economy, the more that, the more I see things going, the more I see lawmakers and governors talk about extending shutdowns, the longer that this whole situation pans out, the more that I realize I don't want to put any more money, into Carnival Cruise Lines. If this goes back down to $8, I'm not putting more money in. Well, before I sold, I'm not putting more money in. I'm already in with like 15, 16 grand. I'm not going to throw another $10,000 into average. If it breaks $7 and goes all the way down to $3, I'm not going to put any more money into it. And so while I like the company, while I think that it's really a great deal right now, while I think it could eventually within the next 3-4 years be back up to $40, $50, I really don't want to add any more to this position. So I'd rather scale out right now. And one of the big things for me is this is how I try to weigh out my risk. If tomorrow, everything turned around and this ripped back up to, let's just even say realistically, $20 a share, I'd be missing out. I sold about $5,000. So I'd be missing out on a 70% return on $5,000, which is probably like $3,800. I'm not sure, but off the top of my head, I would rather risk missing $3,800 in profits than this thing go down to $7, $6, $5, $4, and I'm not able to buy more. I'm not saying that anything really has changed. I'm saying that I started buying in way too soon. That was my problem. Now, technically, right? For those of you who know me, I'm a long-term investor. I'm also a trader, and I do like to use technicals in the short term to decide where I think a stock is going to go. We see this overall descending wedge, which is not at this point yet pretty bullish. What will usually happen in this situation is we get this bounce, We bounce between support and resistances. Kind of think of like a pimple. These are your two fingers. It's really gross, but as you're squeezing your fingers together, it's pushing the pimple until it comes to its head, or in technical analysis, it's called the apex, and then it breaks to either side. 8 to 9 times out of 10 on a descending wedge, we pop to the upside. Now, this is kind of a descending triangle at this point, which is kind of bearish. We're starting to see a squeeze here. The RSI is pointing down, which is not good. We are seeing the TTM start to fire, which means a squeeze is going to be happening. And we've been holding around this resistance and this support for a bit. This could pop either way. Technically, I would expect it to pop down. That's not really why I sold. Technically, I just want to put that there, but that's not why I sold. Let's go into some fundamental things that are happening with the business. Now, obviously, everything sold off because a lot of people were sick. Not a lot of people want to go on cruises. Obviously now they were shut down for 60 days from even being allowed out on the water. Now they've extended that to 100 days. The CEO has come out and he has said, because I can't say that word, but because of this devastating outbreak, cruise bookings for 2021, despite cruise bookings for 2021 are strong. And I would kind of expect that, because I don't think people are going to stop going on cruises. I think that, within the next year or so, people are still going to go on cruises. People are still going to want to go on vacation. I feel the more cooped up we all are, the more you're going to want to go out, the more vacations you're going to go on. Now, I think the airline industry is going to probably recover much faster than the cruise line industry is. And that's because, number one, all the main ones are American companies. So when there is a bailout, and like we've been talking, they will be bailed out. Cruises like Royal Caribbean, Carnival Cruise Line, Norwegian, they will not be bailed out first because they are not American companies. These companies, even Carnival, is not an American company. So fundamentally, that's first strike. The whole outbreak situation and 2021 numbers that are strong, that's very good. They've also come out and they've said that the CEO has said that, even if there were no bookings at all for the rest of 2020, they would be fine from a cash flow standpoint. Now, I would not expect really any bookings for 2021. I think that by the time we go back to work and we start to open the economy, I know around my way they're saying May 15th. I think it's going to be probably June. A lot of people aren't going to have the money to go on vacation. Even though people are going to want to go on vacations, I don't think they're going to have the money to shell out $6,000, $7,000, $8,000, $9,000, $10,000 for their family to go on a cruise. I think that if anything, they're just going to go to their local beaches. They're still going to go on vacations, but it's not going to be this extravagant thing that normally a family would end up doing. So I would just expect, Carnival Cruise Line, the entire 2020 year for all cruises is done. I would expect that little to no revenue at all. Now, how are they going to keep the doors open without any revenue? Number one is going to be the huge dividend that they have. They cut it. And we all expect that. I did not expect this dividend to stay. I don't think they cut it entirely. I think they just suspended it. The other thing, and this is where we had that big rip a couple weeks ago, Carnival stock soars after Saudi Sovereign Wealth Fund takes a stake in the crippled cruise company. So that is going to give them some working capital as well. They took a loan, and I think the interest rate was something really high, like an 11% interest rate. My biggest problems, right, and my main reason, actually, let's go into that, on why I went into Carnival and why I was so bullish. And obviously, as time goes on, this is continuing to dwindle. The main things that I look for in a company is going to be revenue growing year over year. And let's pretend that this entire situation, I can't say the word, let's pretend that this entire situation never happened. We have a company where gross revenues are going up substantially year over year. That means that there is a demand for cruises. This means that more people are going on cruises. This means that they're selling more cruises. This is very healthy when it comes to a business. Let's look at total net income. So for me, I not only do I want to see revenues going up, I want to see net income going up, because it doesn't matter how much money you're keeping. I mean, how much money you're making if you're not keeping more money every year. And so a bit of a hiccup through 15, 16. Oh, actually, that's even better. So 16 to 17 was kind of flat, and then we kind of went down. But overall, good total net income numbers. Now, from a balance sheet standpoint, if we look at the total assets versus the total liabilities, it's a 2-to-1 ratio. I really enjoy that. So fundamentally, before this whole situation that ended up happening, I would invest in this company 100%. I really do like this company. I still like this company. But from a, overall general market standpoint, and we can take a look at this now. I will bring up S&P 500 futures. 280 has been a really, 2,800 on SPY futures has been a really, really strong resistance. We're seeing higher highs coming in here, but we're starting to see a divergence happen here. A divergence very quickly is going to be higher highs in price action, but lower highs in your RSI. So you're starting to get this, mix up where the strength is not moving with the price action. And 8 times out of 10, your RSI is usually the true indicator of where the market is moving, because we're basically losing steam in the movement of price coming up. If you want to understand more about technical indicators, if you want to understand much more about technical analysis, how to trade, how to read charts, I will put my private academy link down below. It is 100% free. We have over 100% free for your first month. I'm running a special because of the whole situation that's going on. I don't want that to be a reason for people not to learn how to trade, for people not to learn how to invest. So I want to give that away for your first month, 100% free. I will put the code down below, and I will also put the link. But we're seeing this is a very bearish setup. We came all the way back up to this 50% Fibonacci, and we're getting rejected. Technically, I think the market has to pull back at least down to this 200-day SMA and to this Fibonacci level. So, I would say maybe even possibly, depending on how bad things get, at least 2,500, or we could find some support around here at 2,642. Overall, when I look at the state of the economy right now, and I'll make a longer form video on this, if we were to go back to normal within the next month and a half, I don't think that the effects on the economy would be as bad as a lot of people think. I think that pretty quickly people would go back to spending the same amount of money that they've been spending. I think that people would, things would be relatively the same. Like, don't get me wrong, the economy would still take a huge hit. But what worries me is if this lasts till the middle of July or the middle of the summer, basically for every extra month that we're going to be shut down, I think we're going to have 3 more months for recovery. So obviously, if people are still unemployed, if people still aren't working, this $1,200 stimulus check is not going to be enough for people to live off of. That's just the truth, right? The other issue that we have is, the longer that this goes on, these businesses are not going to be able to stay open. I know there are PPP loans that a lot of my friends and colleagues are actually getting, which is great. They're primarily for payroll. You can also use them on rent and utilities and bills and everything. But I think a lot of small businesses are going to start closing if this lasts. And a huge issue that I saw this morning was that in South Korea, some people who had the virus and beat it actually ended up getting the virus again. Now, I have to look into how true that is. I have to read more on that. But if that is the truth, that could be terrible. And now imagine if this whole situation happens, we go back to work for a couple months, and then we don't have a vaccine, which I think they're pushing for, October, November. But then what if all of this resurfaces again next flu season? I mean, I think that it sucks, because as much as I am a capitalist, as much as I believe in, opening up the government, opening up the economy, because I don't want to see a lot of my friends' businesses and just business in general, go away. It's also like, if we don't open this the right way and if we don't really take control of the situation, it could be catastrophic to the world economy, which could be a huge issue. So I do think that we need to come back overall. I do think that we need to make at least another 5% pullback on the S&P 500. I think at that point, people will feel a little better putting their money in. Earnings season is upon us. It's just going to get crazier and crazier. The banks, I made a video on that. I'll put that down below. The banks are just bad. Earnings were terrible. And I don't think this is over. I really don't. I think that we need to come back a little bit. I was getting very optimistic for a couple weeks ago. And about a week ago, actually. And the more that I sit around and I think about it, right? The more, especially with a company like CCL, the more that I realize, like, I would rather risk the profits, because I still have a pretty big position for a very speculative play like this. $10,000 and a speculative position like this is a lot of money, because they could go bankrupt. Like, there's probably a 15 to 20% chance that CCL could go bankrupt entirely. But then the rest, I don't see them not going back up to at least $40 in the next 3 or 4 years. So I'm still in it. I still have my money where my mouth is. I'm just having some money on the side to where if it does go down, I can average down, because I don't want to be in a situation where I can't buy more if the situation calls for it. So let me know what you guys are doing. Let me know if you own CCL, if you plan on buying CCL. Let me know if you hate the cruise lining industry and you think that it's going to go bankrupt. I'd love to hear all your guys' opinions. I would love to know what you guys think. Comment down below, like this video, subscribe to this channel. It really helps the algorithm. And until next time, guys, I will see you.